Let's talk about the earnings and the earnings beat also that we have seen. A big thumbs up from the markets in a sense. A strong quarter, and we also heard about newer service offerings that have aided growth. Tell us more about these service offerings. What are they, and is this the new strategy going forward, the asset light model and the new service offerings?
So all the new services that we have started last year and even this year, they actually go hand in hand with the current express road service that we have. And we have a network of almost 1,000 branches across the country, and having all these additional services from these branches actually help in better cash utilization and better profitability in the long term. And also we can cater to the same customer, same client, with these multiple services. So I think that's a very solid strategy in terms of going multimodal, yeah, being pan India present, be able to launch all services not in pockets of India but all across India. So that also helps in the overall the growth strategy that we have put in place. The new services would probably account for about almost 25% of the top line by in the next 5 years. I think so that would equate to about 500 crores worth of revenue from these new services.
Mr. Agarwal, so the contributions coming in almost 25% from the new services. Before I go into, all of them one by one, a quick word of the larger theme that we're seeing out play on the markets. Inflationary pressures, cost pressures, and the impact it's having on margins. Your margins, very strong in the quarter gone by. You've seen a big uptake, 16.5%. Is this sustainable, and how are you going to protect them or expand them?
Absolutely, they're sustainable, and we are actually going to be growing them also. So I think by year end we hopefully we should be back at 20% levels. If not 20%, maybe definitely around 18.5%. That would make us the most. That was make us and also retain our position as the most profitable logistics company in India. The benefit of being in the express industry is that it's a relatively easier passover to the clients. And we have been seeing that happen frequently as the prices have been going up, and the acceptance has been there by the customers. So overall, we're in a good shape. And going forward, we all know that the oil barrel might reach $100. So we're getting ready for that also.
When you say you're getting ready if oil crosses $100, what is your readiness? Obviously, you can't store oil. That's not how things would work. So, are you talking to your customers for price hikes? How are you preparing your firm?
Is we go on a different strategy when that happens. We start optimizing our capacity even better. And with all the new technology that we have introduced, it's already saved a big percentage, a big chunk of of wastage. So when we know that the price is going to be increasing, we have kind of like planned out already what would be the capacity at what revenue. So that is something which will guide us, for this quarter if the prices keep continuing going up.
How much of your business you would say is purely coming from e-commerce, the new age businesses?
I'm very glad that I'm not into the so much of the e-commerce B2C segment. That's a leading segment, and it will continue to do so in India for a long time because India doesn't have the volume. And I have always focused on, bringing out the best for our shareholders and in general, the logistics industry. So what B2C does is that it increases the cost of operations without actually bringing in any returns. So if you have like a shipment which you're charging your client 1 rupee or 2 rupees, or sorry, 10 rupees, then you would end up spending 20 rupees in delivering that. So I think it's totally lopsided equation of doing business. So I'm not in favor of B2C at all.
Interesting. Chander, but just to take that point forward, how competitive is the industry right now? And do you foresee better tonnage growth going forward?
So the industry by 2030 is going to be $1 trillion logistics cost of India. Even if I discount it from 15% to 10%, it would mean that if the GDP will be 10 trillion, let's hope by 2030, 10% of that is $1 trillion, and 70% continues to be road cargo. So that's $700 billion. So the market opportunity is massive. I'm also seeing that a large chunk of the air cargo is moving back to road, and because somehow at these prices, at these fuel prices, it's not sustainable. And anything in India, and India being a very price sensitive country, anything which is out of equation doesn't tend to survive for long.
Interesting. So, Chander, I mean, point being, how do you grow the business from here? Do you see further consolidation? Do you see yourself headed in for acquisitions? And thereby, then, what is the capex outlay, say, for the next 2 years?
We have planned capex of about almost 500 crores, and out of which 250 crore will go in automation of the sorting centers that we have planned. These sorting centers is actually not being converted from lease to own, but the owned ones are being, the size is being expanded, because the ones we have were constructed 20 years ago, 15 years ago. So they need to be, the capacity has augmented. So we need to augment the size of these sorting centers also. If you look at the market share, I think, in the logistics industry, about 95% or 90% is unorganized. And we have increased our market share already, from 5 to 8%, and we will continue doing that. So by 25, I think, in 5 years, we would be at least at about 20 to 22% of the market share. And looking at that, I would say that the unorganized segment is not going to reduce, but we will see a lot of consolidation happening
there. Okay. Great to have you on the show then, Chander, today. Thanks as always for taking the time out and speaking with us.
Thank you.